Another stock we'll be tracking very closely is Wipro. The Q1 earnings were very disappointing. Revenues fell by 2.8%. The company is guided for a weak Q2, -2 to +1%. So in all probability, Q2 is also not going to see any recovery. Growth could even be negative. So Wipro, the earnings are weak. Analysts have lowered the EPS estimates, but yesterday the ADR rallied 1.3%. Let's invite Kumar, Rakesh, VP Equity Research at BNP Paribas on the show now. Kumar, before we get chatting about the internals of Wipro, wanted to ask you, what did you make of the strength in the IT stocks yesterday in the aftermath of weak numbers from both TCS and HCL Tech? What explains the up move that we had yesterday? What have you picked up?
Hi, good morning, Reema. Thank you for having me on the show. I think this quarter, if you see across the companies who have reported results so far, investors have been far more forgiving on slight disappointments in the numbers. And that possibly gets explained by two factors in my view. First is the positioning of investors, both domestic and foreign institutional investors, have been quite bearish for the sector. They have gone significantly underweight over the last 1.5 years for the sector. And that positioning is something is now turning to be favorable for the sector on the margins. The second is getting slight comfort on the macroeconomy side. The inflation data which came in a couple of days back for the US suggested that the Fed policy has started showing results. And the comfort on that is something will definitely help the tech sector and in India, IT services especially, because a large part of the valuation is sitting in the future cash flows. And if the inflation starts coming down and the hope on the interest rate also starts moderating, then that definitely is positive for the tech sector in general. So that too possibly is the explanation why the sector has seen such a strong response despite muted growth and results.
So Kumar, good morning and thanks for being with us. How are you feeling about a stock like TCS now? I mean, in the last 3-4 months, the stock has not done much. It's up about 5-6%. But do you think that the worst of the macroeconomic challenges are behind us? And from an investor standpoint, is the risk reward now favorable for a stock like TCS?
Hi, Sonia. I think these are the times to buy a stock like TCS when the valuation is looking below their 5-year average levels. The outlook from medium to long term holds very strong, and there are transient issues because of which investors have built a very bearish positioning for the stock. So these are possibly the times when you start adding blue chip names like TCS from a more longer term portfolio building position. And that is what we are advising investors as well, that now would be a good time to start building IT portfolio, and that we could start with a stock like TCS. And more importantly for TCS specifically, in a demand environment where the focus has shifted towards cost optimization, TCS has far stronger capabilities in that area and possibly will continue to gain much higher market share than what it has done over the last year or two. So it could possibly be outperforming on the growth side as well. And that is something which you could see in the order booking, which they have been reporting for the last 2 quarters. The book to bill, what TCS has been reporting for the last 2 quarters, is among the highest they have reported in the last 2 years. So while the growth is not reflecting those strong order bookings because there is a lot of reassessment on the existing projects going on because of the macroeconomic concern, but as those concerns starts getting elevated, which possibly will start happening in a quarter or two, we would start seeing a much stronger growth reflecting in TCS. And then the valuation which we are looking today will start looking very inexpensive. So TCS, we are quite positive on the name, and it's our sector top pick as well.
Why not Infosys? Infosys trades at a valuation discount to TCS. Its growth rate over the last couple of years and quarters has been more than that of TCS. What are you expecting from Infosys, and what have you made of the spate of resignations that we've had, senior level resignations at Infosys? Do you think in any way it could hamper execution, the delivery in terms of handling the project at Infosys?
Reema, these are large organizations. I do not think that it would be heavily dependent on just one individual per se. And from the sector perspective, the medium to long-term outlook is still quite positive for the sector. And Infosys has very strong capabilities on the digital side. The investments which they are doing on the Gen AI side are also quite encouraging. So from medium to long-term perspective, Infosys continues to look quite interesting. The near-term challenges are, which we saw in the last quarter result, is something as the demand, especially the discretionary spending on the IT has slowed down. That has impacted the company more than what it has done TCS. And that is the reason why our preferred pick is TCS.
Very quickly, we don't have too much time. Do you think HCL Tech's guidance for FY24 is at risk given how challenging the environment is?
So they are quite confident on the pipeline side. The data which they shared on the pipeline, which is up 26% quarter on quarter, 17% YOY, that possibly is giving them the confidence on the recovery on the demand side. Even our expectation is that second half of this fiscal year would be much stronger. The point I was referring earlier, that strong bookings and comfort on the macroeconomy will result into a pent-up demand in second half. And that could possibly help HCL Tech.
All right, that was very quick. Thanks, Kumar, for joining in. I really appreciate your thoughts. Have a great day and a good weekend where we're heading